I think we can get going, inshallah. Let's start. Bismillah walhamdulillah wa salatu wassalamu ala rasulillah wa ala alihi wa sahbihi ajma'in. It's our very first interview with SK being myself, and I have Sayyid Sultan Mohsin from UIF. The goal today is to really break down what UIF is about. I gave a quick snippet of what to expect for the audience and the viewers, but just to give a quick recap, there are a lot of people who have doubt in Islamic home financing, and I'm sure you've come across this yourself. And so, what I really want to do is use this platform and ask a few questions that I get asked as a real estate agent from clients pretty much all the time, right? And before we start, I do want to make a short disclaimer that the purpose of this is for Sayyid Sultan Mohsin to tell us what UIF is about. In regards to Sharia rulings, in regards to halal and haram, that has been issued by the scholars that signed off on UIF. So if the motive is for us to watch this video and expect Said Mohsen, who is an area manager, to talk about Sharia rulings, this is not the objective today. If you'd like to see which scholars issued those fatwa, you should go on the website. One of them is obviously popularly known in the US, Mufti Abdullah Nana, and refer to him directly because there is more nuance to a fatwa than just what meets the eye. But at least for the sake of our conversation, what we have in scope, we're going to cover a few questions that are generally asked by clients. And also for anyone who is watching, inshallah, I do have intention, inshallah, I do have intention of inviting a very particular Islamic finance expert, scholar, inshallah, to this interview down the line, who can really break down the nuance that I'm talking about right now. So before we get started, Brother Sultan, why don't you give us a little bit of your background? How long have you been working with UIF? What got you working into UIF? We can keep it slightly brief, but I want people to understand your experience in the field before we start discussing anything.
Assalamu alaikum warahmatullah. Obviously,
MashaAllah.
my name is Sultan Mohsin. I've been working at UIF, aka University Islamic Finance, for a little over 6 years now. Obviously, it's been one of my passion to um, avoid interest in my own life, which in turn into I wanted to help people do the same as well. That's why I got started with the company and
Hmm.
have been with them since then. As of right now, UIF is functional in 27, 28 states, residential, commercial wise. I'll break it down a little bit more as you have more questions about the company, and then we'll go from there.
Okay, yeah, that's perfect. And so the first thing, really, just to get into the discussion, and I've shared a few of the questions to you prior to, but obviously there may be a few follow up questions as we're discussing. What is the first, or what are the main key differences between, let's say, someone going to University of Islamic Financing versus going to Rocket Mortgage or Chase Bank or any conventional banks? I mean, I'm sure you get this question a lot, but if you could just give us a quick list of the key differences to show us that affects the buyer.
Well, the biggest difference between UIF and a regular bank is the process, the contract, the paperwork, all those three key main differences. With a regular traditional mortgage, they're in the business of buying and selling money. So what they're doing is they're getting their money from somewhere else, and then they're selling that money to you, because what they're doing is they're lending you money and charging you interest based on that. With UIF program, what we're doing is a trade in the laws of Islam, where there's a tangible asset involved, and you would be going into a partnership agreement with us, and the the that's how the program is. That's how the program works. But keep in mind, this is not a program that we just came up with on our own. This program has been being used for decades and decades throughout the whole world. And even in America, majority of the community scholars have already approved this product, which is called Declining Balance Partnership, aka Musharaka. In Musharaka, the way it works is we would purchase the property together as partners. Let's
So
say. Go ahead.
Real quick before we go into musharaka, because I want to ask that a little bit later.
Hmm.
What I'm trying to get out of this question is like, for example, and this is from my prior knowledge, and I want to highlight this. This is what I think UF does well as guidance residential. But what happens? What's the difference between a buyer who's working with, let's say, Islamic Home Financing, right, versus Rocket Mortgage or Chase Bank or whoever it may be? What is the difference for them when they default? They cannot make payments. What is the big? Is there a difference there? Tell us about that a little
There
bit.
is a big difference with regular banks. When you, let's say you're not able to make payments, the mortgage company or the lender that you're working with, they can come after all of your assets. They can come after if you have other properties, they can come after them. If you have vehicles, any type of property, they can put a lien against them. As far as us UIF goes, I don't know about guidance residential, but with us, we do our best. Let's say you are going through hardship, we ask you to obviously let us know as quickly as you can. So we will try to put a stop on your payment and try to help you out from 6 months to up to a year, depending on case by case situations. But let's say even after giving you that much time, you're unable to get back on your feet, continue with the contract. We ask you, what are your intentions? Do you want to keep the property? If so, what can you do? Maybe somebody else in the home can start making payments. So let's say no other option is working out for you. At that point, we would ask you to sell the property in the market
Hmm.
and give us whatever the principal balance is remaining.
Yep.
Let's say the principal balance is more than what the property is worth at the moment, which is very
Principal
highly
balance
unlikely.
meaning principal balance meaning this is the money that's left over from the
Left
original
over
loan.
to,
Right.
yes, the
Right.
partnership wise,
Right.
right? Our share. So, but keep in mind, it's very highly unlikely this happens in America. But let's say it did happen, where the principal balance is principal balance is
Higher
higher
than
than the worth of
yeah.
the property, right? And
Yep.
then you end up selling the property. And what we would say is, we would say, okay, give us whatever you can, and then after that, you walk away. We don't come after your assets. You don't have to file for foreclosures.
So
You don't have to file
pause.
for bankruptcy.
This is really big, right? So that is the stark difference because people always ask, "Hey, UIF guidance, these guys are the same as every bank, right?" Let's talk about UIF particularly because I think you can speak to them a little bit better. You're telling me the a huge difference for someone who cannot pay their bills, their mortgage, right? Who's working with Chase Bank or Rocket Mortgage or anyone conventional, if they can't pay, that Chase Bank will come after all of their assets.
That is
Versus
correct.
UIF, who cannot come after their assets, they will allow time for hardship. And on top of that, if what you're referring to is a short sale, when the principal remaining is higher than what you end up selling it for. Okay, if that's the case, even then UIF cannot take anything more than whatever the house sells for. I mean, that's a huge difference in and of itself. I'm not going
But keep in
into.
mind, there is a small disclaimer there.
Go ahead. Yep.
Obviously, you have to have a legitimate reason why you're not
Yeah,
making payments.
hundred
You can't
percent,
just
100%.
turn
Yeah,
up
yeah.
and say, I don't want to, I'm not, I don't want to make do on my contract.
I mean, then you lose
That's
your house, man. I mean, think about it,
that's
right? No
highly
one.
that yeah,
Yeah,
that's obviously against the way you're supposed to be as a Muslim, right?
right.
So
hundred
keep in
percent.
mind, you have to have a very legitimate reason why you're unable to continue with the contract, right?
Right.
And then, like I said, it's case by case, and we do our best to work with everybody. And alhamdulillah, so far, we haven't had any issues.
Good. And that's so my main point for the viewers is to understand there is a difference, right? I understand pretty much everyone ends up paying on time, but that's not the main point. It doesn't matter whether you pay on time or not. A clause like this is what makes it halal versus haram. Right, is that's the main point, right? And that's kind of what I wanted to get into. That's the first part, right? Default meaning I don't have the money to pay my mortgage. What's the difference between UIF and a regular bank? Okay, now let's go into point two, which is maybe you can expand on a little bit more. You were saying this earlier. You said something about musharaka. What is this, if you can speak about it a little bit?
So, in Islamically, that's the term of the name of the contract is the musharaka. It's a declining balance partnership program. The way the program works is we would purchase the property together with you as partners. So let's say it's a 10-room property. You're buying 2 rooms and we're buying the rest of the 8 rooms. So we buy the house together. But since you're the one that's living in the property, using all of the 10 rooms, but you only own 2, you pay us rent for the rest of the 8 rooms. So your monthly payment would look like rent plus principal payment, which goes towards buying our shares every month. So now every month your shares go up, our shares go down. faster you pay down our shares, the more money you would save, obviously, because once you're 100% owner, you don't have to pay us rent anymore. And that's how the Musharaka contract pretty much works.
So just to recap this, there's two aspects to this. When I'm as a buyer, for me, I'm paying towards two aspects. The first aspect is I'm renting as if I'm a tenant in the house because I'm the one using the house and you're not. So
Mm-hmm.
you and I are getting into a partnership. I'm using the house, you're not, so I'm paying you rent. That's part one, correct?
That is correct.
Okay. Part two, you said that since we bought this house together, I put 5% down, you put 95% down, and I'm buying back the share. Can you talk about that a little bit? What does that mean?
Yeah, you're buying back. So the purpose of the contract is for you to purchase the property, right? At the end of the day, that's why the contract is being created. So every month, your 5% share is going up. Our
Mm-hmm.
95% share is going down. So
Okay.
the quickest you can get to 100%, the better it is for you because once you're 100% owner, you don't owe us any more rent.
Okay. So on this same note, I've heard this question come up that hey, are you going to change the rate of what I'm paying? How does this work? Like, let's say right now, let's pretend and let's say right now I get a house and my rate is at 6.5%, which isn't too crazy to believe, right? And there's a certain mortgage amount that I'm paying, right? What happens 5 years from now? What happens if I pay more than I'm supposed to? I'm supposed to pay $2,000 a month. I end up paying 3,000 additional to the principal. What happens to my rate? Anything like that?
So as far as your rate goes, it is fixed for the whole term. Well, we have many different type of contracts. You could get the fixed, you could get adjustable ones as well. We have that available as well. But majority, 99% of our contract is fixed rate, where the rate will be fixed for the your whole term. Now, let's say if you're paying extra, you do have the option to do a recalculation to lower your monthly payment. But as far as rate wise, it would still stay the same. But recalculation would, in turn, would only lower your monthly payment, but keep the duration of the contract same. Meaning, let's say you signed a 30-year contract. If you recalculate, you're gonna still end up paying it off in 30 years. But let's say if you make extra payments without recalculating it, then you're paying the house off much quicker than 30 years. Then in turn you save a lot more money. You save money both ways, right?
Right.
Even if you recalculate or you don't, but more money is saved if you don't recalculate and continue to make the extra payment along with your regular monthly payment.
So a fear that I've heard from some buyers is that they were thinking, well, with UIF, do I have to pay a penalty if I finish off my payment earlier? Like I have a 30-year mortgage, I want to pay it off in 5 years. Am I gonna get penalized for that?
There's no such thing. We encourage you to pay it off early so that we can use that money to help somebody else.
Okay. This is kind of, I mean, I had to ask that because it's actually a very real question. People genuinely believe this and they always ask me, right? And actually, just to speak from experience, I had a client, he purchased a house at 530,000 or $525,000, right? He got a 30-year mortgage and he paid it off in 2 years, right? And there was no penalty. So I just wanted to hear it straight from the source itself. And that was kind of important. Okay. So we talked about the key differences. We talked about a fixed rate, so I don't get penalized, nothing like that. Now we're going to go into the next part. Again, it gets a little bit, maybe we can, so the declining partnership, we talked about that as well. So that helps. So I'm taking back my ownership of the house slowly over time. Now the question is, how does UIF make money if they don't charge interest? Is it just off, like, how does it work? What are the
So
aspects of
our the profit that we're making is from the rent that you're paying every month. That is
right,
our profit.
right.
Outside of that, your regular monthly payment would have your rent payment plus your principal payment and then taxes and insurance. Outside
Okay.
of that, we don't have any hidden fees. And the
Okay.
money that UIF is making is based on how much rent you're paying us every month.
Got it.
That's our profit.
Okay. Now, when someone, let's say I want to buy a house for $100,000, okay, let's use that number. It's easier to use, and I have 5% down, right, which is $5,000. How do I bring $5,000 to the closing table, or do I need to bring more? What is that? Do I have to pay? Do I have any additional fees at that point at the closing table?
So every doesn't matter who you're going with, every bank you go with, there is closing costs involved.
Okay,
With
so this is
UIF,
across the board.
across the board. With UIF, we only charge $9.95 from us. Keep in mind, closing costs has many different companies, many different entities that are
Right,
working
right.
on your transaction, so they all have fees.
Right.
So from UIF perspective, you're only going to pay 995 one-time
Okay.
fee, whether you're buying $100,000 house or
Okay.
$1 million house. It's a
Okay.
fixed fee, no matter what. Okay. Outside of that, all the other fees would be your appraisal, title company that you would have to hire to research your title and insure your title. Then you have regular your property tax. Let's say if you're
But
buying
from
in
UIF,
Michigan,
but just from UIF, it's just that.
995 exactly.
And so, because sometimes people have a misunderstanding, they feel that UIF is charging them all the fees.
No, no. Keep
Okay.
in mind, only 995 is going to UIF, and everything else is going to other companies.
Got it. Okay. That so again, we're just my main focus here is to clear all the doubts, right? And hopefully, inshallah, the idea is to get people to understand or have have a better perspective at least of Islamic home financing. Okay, now I have a question on this. Now, you said you have Musharaka, right? Is this the only program available, or do you have other programs? Can you explain that a little bit?
So currently, we're only offering the Musharaka Declining Balance Partnership Program for residential properties, mainly because majority of the community leaders they all agree that the Musharaka is a much better model and is very flexible, and it also coincides with American home buying guidelines very well, whether it's for purchasing or refinancing transactions. But as of right now, we also offer other programs, which is not home financing. Starting 2023, we started offering time deposit accounts where anyone can become an investor with UIF by just pledging a small deposit of 5,000 for at least 1 year minimum. Okay, so you're able to earn profit with us by
Okay.
investing your money into somebody else's home contract. Or we also offer right now in Michigan only, we're offering vehicle financing as well, and slowly rolling out to other states like Ohio, Illinois, Texas. We're
Okay.
going to be rolling out pretty shortly. So you can become an investor with UIF and earn money as well.
So I have a question. So look, there are other financial institutes that have different the reason why I asked about the program, to be frank with you, is that there are other institutions that have various programs, some which are permissible and some which are impermissible. So really what I want to get down to is the programs that UIF offers, are they all permissible? Have they all been signed off by the scholars? That's what I want to
Every
understand.
single one has been signed off. We have our own Sharia supervisory board, and at the same time, we follow the IOFI standard. If people don't understand what IOFI is an entity. They govern all of the Islamic finance throughout the whole world, not just in
Where
America.
can someone look that up? How do you find out more about IOFI?
If you just Google IOFI, they're that big. They govern bigger banks like Bahrain Bank, Saudi Bank, like
Spell
all
that
the.
for us just briefly. That's so viewers can look it up.
It's
IO
AO
or A O. Go ahead.
double IFI. It's
AO.
abbreviated. Yeah,
Okay. AOIIFI.
yeah,
Right.
yep.
And they are a board that pretty much governs all throughout, even internationally.
Internationally, yes.
Okay.
So
Okay.
we
Good.
follow their standards when it comes to home financing or any type of Islamic products that we're
So
offering.
not just Michigan or not just America.
Yeah, not yeah,
Beyond that.
exactly.
Okay.
Beyond that.
So that kind of helps get rid of that question, right? Another question, and this is something that this is my favorite question. I've mentioned this to you a few times before we got on. It's this concern that many people have, that they say, look, um, I got my house with UIF. I bought with UIF. Everything was great. I signed with UIF. I understand I got into a musharaka. I understand there was a partnership between the two of us. And then a few months go by, and then I get a letter in my mail saying some other bank's name that's like an American name, right? Meaning a conventional name. And then it says my name on it saying, my loan is with them and I have to pay them money and there's interest involved. So, this question that I have for you, it's a two-part question. The first part being is, what's going on with this other bank coming into the picture? And the second part of the question is, and after you answer the first one, we can slowly go into the second part. The second part of the question is, why does it say interest if I thought I was avoiding riba?
Okay. As far as another bank, I'm not sure if that's something. Maybe people are there's a misconception there. We don't have any other bank that we deal with. Maybe uh, people that signed with other Islamic finance companies, maybe like La Riba or Ijara CDC, they might do something like that, where because they turn around and sell their product to a regular bank, but we don't do that. With us at UIF, you always stay with UIF and
So
going forward.
I meant like the Midwest loans. I was referring
No,
to
so
Midwest.
as far as Midwest Loan is owned by UIF, keep in mind, Midwest Loan Services is just the billing department. All they do is collect bills, pay your taxes on time, and insurance on time. So it's not a separate. It's not like it's owned by another company. It's owned by UIF. It's a sister company. So it's not owned by anybody else. And all they do is collect the billing on time, as well as pay your taxes and insurance on time. That's pretty much it. And as far as dealing with Midwest, going forward, even if Midwest is taking care of your billing, nowhere in our paperwork it would say that you're dealing with Midwest. You only be dealing with UIF going forward. Okay. And as far as paperwork saying interest, keep in mind our contract. When you're signing our paperwork is completely different than regular mortgage. The partnership agreement that you sign with us does not have any interest on there, but there are few federal required disclosures that do mention the word interest. However, those documents are not in our contract, but those documents are still required by the federal laws to be presented to you at the time of purchasing the property. Our independent Sharia board has already reviewed those documents and they approved those disclosures as well, since they are required by the federal law, but they are not part of our contract. Keep in mind. But those disclosures are there in place to protect the community against predatory practices where banks are taking advantages of their buyers, because the buyers don't understand anything, when because a lot of first time buyers don't really understand rates or how much they need to be paying, what's their cost, closing costs, all of that together. That's why the government has streamlined those documents to ensure that whoever is purchasing a property, these disclosures are being sent out to them so they read the disclosures and understand what they're getting into.
Okay. So just to give a quick recap, you're saying to the first part of my question, UIF does not sell its mortgage or does not sell the loan.
No.
Okay, and it works
We
with
do have investors. Like I said, you can become an
that's
investor.
different.
Yeah, yeah.
That's different. Yeah, but in terms of selling the mortgage off,
No, we don't.
okay, and then you're saying that you work with Midwest Loans, which is owned by UIF,
Sister company.
and it's basically a building and logistics department. Is that what it is?
Just billing, like billing. They
Yeah.
bill you. That's it. All
Okay.
they take care of is correspondence, meaning
It,
they're mailing you your monthly statements, your taxes, insurance. All they're taking care of all of that.
Yeah, because I've noticed people become confused with that because that's when they have their trust issue because they don't understand that, right? Because
Mhm.
that's why I'm kind of asking the question because they see that they like I feel for them because I would feel the same way, right? I sign with UIF and someone named Midwest Loans starts giving me emails or letters in the house. I'm like, Midwest Loans, like I thought I was in a musharaka, right? So that's the first part of the question. The second part of the question is you said when I asked about the interest, you said federal laws require the documentation to indicate the term interest, which ulama scholars have reviewed, and they've mentioned that this writing, this jargon, is literally just for the sake of formality in this case, right? And the
Exactly.
fatwa is upon, from what you're saying, the fatwa is upon the actual dealing with UIF and the client directly,
That is correct. But on top of that, they still review the disclosures,
right?
and scholars approved us disclose using the disclosure at the same time. So at the end of the day, we have to use it no matter what, right? And
Right.
they have reviewed it and then they okayed that is something permissible going forward.
Okay, so let me these are the main questions that I wanted to really get into, and I wanted to do it right at the beginning, to kind of, I guess, cater to the audience who have these questions. If I've missed any questions, that's imperative. Shoot me a message or a text and let me know in the comments below. But now I think we can kind of shift from the hot seat because I know I've been kind of asking you back and forth these questions and try to make it somewhat informative for the rest of the duration of the interview, if that's okay. I
Mm-hmm.
think that'll be beneficial because, like, for example, someone who's watching this video, maybe they might start with a skeptical eye, and then as they're going through each question, maybe now they're more inclined to know about Islamic home financing. So let's help them understand. Because here's another question that comes up: if I go with Islamic financing, Sultan, am I gonna have a higher rate than conventional?
So as of right now, I can say with confidence that we are not more expensive than regular banks. Majority of the time, you'll find us pretty much neck and neck with bigger financier like Quicken Loans, Bank of America, Wells Fargo. But keep in mind, if you shop around enough, you always find somebody that's going to be slightly cheaper. Or, but at the same time, you always find somebody that's going to be more expensive than us. We do our best to cut down our cost and stay efficient to stay competitive with the regular market, even though we are offering Islamic finance. Keep in
Okay.
mind, our if you compare us to other Islamic finance companies, I'm confident that we can beat them at any day of the week. We're going to be the cheapest and the best service provider for Islamic finance when it comes to if you're just comparing us to Islamic finance to Islamic finance.
And
But
within
on top of
conventional,
that,
it's pretty standard, you're saying.
very very similar, very similar. It's going to be if there
Yeah,
is a
so
difference, it's going to be it could the difference could be either way. You can find somebody that's going to be more expensive than us. You can always find somebody that's going to be cheaper than us. We like to stay in the middle in the competitive range.
yeah, so what I want to highlight from this question is to show that UIF is not kind of ripping off the customers, if that makes sense.
No,
You know
but
what
keep
I'm
in
saying?
mind, so you have to understand that with the regular banks, they have so much free money.
No, I
You're
understand. I
putting
understand.
of
Yeah.
thousands of dollars in checking account, savings account.
No,
You
100%.
think
Yeah.
that money is just sitting there? No, they're using that money to finance contract and make money on top of it. But with us, you have to understand we have investors in the back that, like I said, you could also become an investor. We have investors in the back that are asking for a certain amount of profit, a return on their investment, right? So we
Right.
have to make sure that on top of that, we have costs to run the business as well. So you want to keep in mind, even after all of that, we do our best to stay as competitive as possible with regular banks.
So that was the main thing I want to show, because a lot of people had fear of that, right? I've spoken to many clients, and they're like, Saeed, I wanted to go with Islamic financing, but I feel like they're gonna be much more expensive, and I don't want to spend too much money on this. And I'm gonna just share some feedback, if you don't mind, from my own experience, right? Is that we have to keep in mind, to an extent, that trying to do anything good in this world has a sense of sacrifice behind it, right? And in this case, if the rate is zero point 0.1 higher, like let's say a conventional bank says 6.4 and UIF says 6.5, for argument's sake, that 0.1% will probably come down to $15 a month
Not
or
even that.
$10 a month,
Yeah.
like $10 a month. In this case, we're going from a system that is purely variant money upon money, which is literally the definition of riba. When you have a variance in one hand to another hand of the money that is exchanged, I'm leaving that behind. I'm leaving behind a system that would come after my assets. I'm leaving behind a system that does not recognize a partnership. Rather, they're just giving me money and they want more money back. And I'm going to a system that would protect me in hardship. I'm going to a system that is maybe $10 a month more. I'm going to a system that is a partnership that I'm getting into, right? And it's not
Well,
even $10 a month more. It might be the same rate. It
well, the
might be the
biggest thing
same
is
rate.
you're securing your afterlife at the end of the day,
Right.
right?
And that's my main thing. So when I'm leaving this and I'm going to that, the sacrifice becomes $5 to $10 if even the rate is different. The
Yes.
least that I can advise people, the least that I can advise people is that we have a due diligence to at least ask someone from Islamic Home Financing what the rates would be. At least ask. It's
Yeah.
do you
Shop
charge
around.
money? Do you charge money if I ask you questions and
No, it's
stuff?
free. Shop around, right? At the end of the day, if you're gonna buy a house anyway, whether you're going with non-Islamic, which I don't condone, but if you're going with non-Islamic, even then, shop around between Chase, Quicken, or whoever, right?
Yeah, so
So
that
while
that's
you're doing that, might as
yeah.
well shop around with UIF, and it's free. At the end of the day, now, now we actually offer no credit check. We do a soft pull credit check, pre-approvals now, where your credit is not even going to be affected if you apply for pre-approvals with us, which is not being offered by anyone else in the industry. I can
No,
guarantee.
that's great. And that my main thing is to kind of like give some hope to the audience, right? With the because the reality is, it's not skepticism that comes from a sense of arrogance. I feel it's skepticism that comes from a sense of sincerity. People are skeptical because they generally feel like, man, is it still haram, right? And that's why we want to give people comfort of understanding, right? Because if the scholars approved it, right, and we have this system that is different, there are always going to be skeptics, but there's always people who are sincere. And so we always have to cater to people who are sincerely asking. And the people who are skeptics, they will be skeptical about everything, right?
I'll be honest with you. You give people benefit of the doubt more than me actually. In my experience in the past 6 years, I would say people call me to convince themselves to not go with Islamic finance. They want any angle they can find to be like, oh, gotcha, oh, gotcha. You're not halal, so I can go with Chase now. Gotcha. That's what they look for. But alhamdulillah, there's some part of the community are really passionate about going with Islamic finance as much as I am. But at the end of the day, that's our goal. Our goal at UIF is to be one-stop shop for everybody when it comes to any of their financing needs. And inshallah, we're working towards that goal, and hopefully, we can accomplish that. And as well as any misconceptions people have, hopefully, we can take care of that one at a time by doing these type of
Yeah,
um,
100%. That's the whole idea,
interview.
because education is power, right? Knowledge
Mhm.
is power, and that the reason why I have, or I try to have more benefit of the doubt towards people is because I feel that they just didn't get the chance or the opportunity to gain that knowledge, right? Once you have the
Mhm.
knowledge, you have a different approach to it. So let me again to kind of continue our discussion, because anyone who is joining in right now, the controversial questions were already asked at the beginning, and we're at a point right now we're trying to make it a little bit more informative for anyone who wants to actually work and deal with Islamic home financing. I know you also mentioned vehicle financing. That's probably for a different day. The main focus is today is going to be the Islamic home financing. So if someone wants to work with UIF, right? What's required for them to get a pre-approval? Just briefly.
Oh, very simple. We look at your recent 2 year work history, whether it's self employment or regular job. Let's say somebody that came out of school, we don't even and graduated, just your degree and the new job is just enough. We look at your credit history as well as how much down payment you're bringing. All those three things together will determine what's the maximum amount you can qualify for. And even right now, our credit check is not even, we don't even do a hard inquiry anymore. We just do a soft pull where it doesn't even affect your credit report to get pre qualified now.
So 2 years of work history. Is that what you said?
Hmm.
My taxes, basically.
Taxes, whether it's W-2 or self employment.
Okay.
If you're a college graduate and you have a degree and you just started a new job, then we don't need 2 years.
Okay. And then you said there's a soft pull on the credit score.
Hmm.
And is that it? That's pretty much what you need to get
That's pretty
started.
much I need. Yeah.
Okay, so then let's shift. Let's break it down a little bit more. Let's go to self-employed, right?
Hmm.
How does that work? I heard it's a little bit more complicated. How does self-employed work? Because
Self
I make
employment.
different. I'm not on a salary, right? I'm not making 80K every year. Some year I make a lot. Some year I make a little bit less. So what does that mean for me?
So we do a 2 year average if you have been self employed for less than 5 years. So let's say you're a new business owner or like you as a real estate agent and they just started out. We would do a 2 year average of their new self employment. But if somebody has been a real estate agent or they have been a business owner for or even an Uber driver for over 5 years, then we just look at the most recent year uh, um, tax return where we look at your net income. Keep in mind when you're self-employed, we're looking at your net income, not gross. And when you're W-2, we look at your gross income. And I think somebody also asked a question in the comment section about the process of Islamic finance being harder than conventional financing. That is absolutely not true. Everybody's financing situation is different. I'm not going to speak into what type of practices what other lenders are doing, but obviously there are some lenders that bend and break some rules to get some people to approve a process where those people shouldn't be approved. At the end of the day, you want to keep in mind why are we denying somebody? Because if we're denying you, we're basically letting go of profit, right? But we're denying you for a good reason because you can't afford the house at the end of the day. If you're able to afford the house, we'll be more than happy to approve you at the end of the day. And if we approve people that can't afford houses, what's going to happen to the community? Look at the impact. So that's why you want to keep in mind we don't like bending and breaking rules. for clients that do not approve, you know, that don't get approved.
Okay, so I have another question. Someone told me that, hey, I went to UIF and I got approved for $250,000. So do I have to buy a house for $250,000?
No,
What does that mean?
you can buy for $100,000, $50,000.
So is it a bad thing for me to have 250K if I want to buy 100K? What if they like,
No,
you
it's
know,
better because when the seller looks at your pre-approval, they think you're a strong buyer because you're approved for so much more.
okay, so that's the point I want to highlight, and I'm going to speak on this as a real estate agent myself, because people think that if the seller sees I'm approved for $250,000
They're gonna want
and
more money.
I'm offering 200,000, they're gonna negotiate with me because they know I have money. And the reality is they can't. Then
No,
they
they can't.
won't. Not because of
Yeah,
that reason. If
exactly.
anything, it makes your case extremely strong. I always tell my clients that get your maximum approval. And they're like, Sayed, I don't want to spend 400,000. I said, no one said you have to. I want
Exactly.
to be able to use your portfolio to speak to you confidently. I want to be able to pick up the phone call and say, look, this house is $300,000. We are offering above the asking price because that's how the market is right now. And my buyer can afford 400,000. You have a solid buyer with me. That's the whole
Exactly.
idea.
With multiple offer situations now, especially now in Michigan, right? Obviously, I deal in even hotter markets like New York, especially in Michigan with multiple offer situations. You always want to get the edge
Hmm.
in any angle you can as a buyer. And one of the edges would be to get a pre-approval that shows you're approved for more than what you need. So that tells the seller, hey, this guy's gonna get approved. I'm not
It's
have
a
to worry
good
about
thing. It's a good thing.
exact. It is a good thing.
Okay. Were there any other questions? I want to just make sure if there was any other questions or not on the comments. You said the harder part. I think you answered that question, right? The process of selling
Yeah,
house form.
yeah.
Yeah. So, and I want to comment on that too, right? So, I personally feel, and this has nothing to do with UIF, just in general, I personally feel that anyone who is giving out approvals for a mortgage or financing, they're giving you actually much more than you deserve. And that's actually a problem. Just to give my 2 cents about this, I'm not a financial expert, I'm not like an economist expert, but just to speak to this briefly, we live in a capitalist community. Our entire nation in America is a capitalist country. This country cares about making money and making money off of making money. So you actually should be paying, or you should be approved for 200,000, but UIF is going to give you 300,000. If anything, I would actually think the opposite way. I would work backwards as a client, as a buyer, and I would say, how much can I afford on a monthly basis? Based upon that, that's the price range I want to get. I heard this when I first got into real estate, and I didn't completely understand it thoroughly because I was, again, very new. And the guy who was training me, I forgot his name, but he mentioned that when people get that approval letter in their hand, they become so excited. They are just, they are so happy, excited to say, "Oh my God, 500,000! I'm gonna buy the house of my dreams." But they don't realize how much the mortgage is for a $500,000 house. I mean, this is coming from a real estate agent who makes more money if you buy a more expensive house. I'm telling you, don't do that, right? Because what you don't want to go into is a state of regret where, and I know many people in this situation, they're struggling right now because they're like, when I bought the house, I was good terms. It was my wife working, I was working, everything is great. Now we have children. Now we can't manage the finances. It's getting tight. May Allah make it easy upon everybody. Allah, I mean, but I'm just saying, like, we need to think a little bit more before we become hasty with decisions like buying a house, whether even if we are approved for a certain amount. What do you feel about that?
I completely agree. That's why at UIF we handhold our customers whenever they're whether they're a first time home buyer or not. Anytime we always give estimates what your monthly payment is going to look like, closing costs, etc., etc. And we always let the clients know that this, let's say in the beginning, the monthly payment is X amount, $2,000. We let them know as well the next year because you're purchasing the property, your taxes are going to go up. Keep in mind, you want to you want to keep at least 300 to 400 more monthly budget freed for that taxes because the property taxes in Michigan has been crazy going up every year. And
So pause. I want to clarify what you're saying. You're saying I buy a house this year, 2023. My taxes are $5,000. My mortgage is, let's say, 1,500. Next year, my mortgage is still going to be 1,500, but what, because of the taxes increase is the overall, because it's combined, mortgage and taxes are combined.
Hmm.
So UIF is not charging me more money; it's the taxes
No,
that's being
it's the
increased.
taxes are going up. Yeah, people like to call up and go crazy. Hey, why do my monthly payment move? I said, brother, have you looked at your or the tax bill? Because at the end of the day, the city will still send you the tax bill. At the same time, UIF will also notify you as soon as we see the tax change. We will notify you. Hey, your taxes have changed. In turn, your monthly payment is going to change as well. Um, and in Michigan, it's almost a guarantee now that your taxes are going to go up.
No,
At
100%
least
happened
at
to
least
me.
a thousand
100%.
dollars.
Yeah,
At least 1,000 is going up.
but in a monthly sense, it won't be that. It will be a
Yeah,
few
1,000
hundred.
for the year. Yes,
Yeah, yeah.
yes.
Right. And I think that's really important for people to keep in mind. I remember I was at a closing table, and I was on the seller's end, right? So I'm helping someone sell their house, and the guy who was buying the house was in the table with me. And subhanallah, he was so concerned about the monthly payment, and he was on edge with his agent that was sitting next to him. Like, you're sure this is all, I'm not paying? This is what I'm paying, right? This is what I got to pay. And the agent's like, yeah, of course, that's what you got to pay. And I'm thinking, like, subhanallah, is anyone going to tell this guy that next year his bill's about to go up? Right? Because
Yeah.
at this moment, if I speak, that agent in front of me looks extremely bad, right? But that's, I mean, that's a difference of knowledge, right? Like having knowledge and not having knowledge. There's a difference in that. It's even mentioned in the Quran, right? So that's kind of what I wanted to highlight. So I'm glad you brought up that point. Do you think at this point, given everything we've discussed, is there anything else particularly interesting or unique? Oh, here, let me ask this just to make sure. Can you invest? Can you buy investment property at UIF? Is that the same thing?
Yes. Yes, you can. Same
How
thing.
many can I buy? How many can I buy?
You can have up to 10 properties financed at once.
What does that mean? 10 investment properties?
No, 10 properties altogether, whether it's one primary and 9 investment, one primary, one secondary, 8 investment, or all 10 investment.
Got it.
Maximum is 10 at once. If you
Got it.
pay one off, obviously you can start another one.
What is secondary? What is that? You said
Let's
primary.
say
What is that?
let's say you live in Michigan and you want to buy a property in Florida
Okay.
because you go there like the snowbirds, right? We especially in Michigan, these very popular people that are older, they and retired or people that are older and have more money, they live 4 months in Michigan, 8 months in Florida, or vice versa. So you can have another primary, which is going to be your second property at another state, as long as you're not renting it out. Because keep in mind, you have to declare if you're renting it out, then it becomes investment.
If
If
I
it's
rent
just
it out, it becomes investment.
that is correct. Second home is something you cannot rent out, and you have it in a different state.
Now, if I get a secondary house, can I still put down 5% on my secondary house?
Secondary house minimum is 10%.
Okay. So these are kind of important things. Wait, one more question. If I buy a multi-unit house for myself to live with, but I bought a multi-unit house, is it 5% down?
Depends. If you qualify for first time homebuyer program, then you can get 5% down. If you do not qualify for first time homebuyer program, then it is 15% down. A
Okay.
first time homebuyer program is not only you're buying the house first time, there are other requirements involved. You could be a second time homeowner. Like let's say you already own a home, we can still give you first time homebuyer program, but there are other requirements you have to meet. Each zip code has their own income limits, and there are certain other requirements also involved getting qualified for first time homebuyer. Once you
Yeah,
qualify for first time homebuyer program, then you can go as low as 5%.
that's what the reason why I'm bringing that up is because just recently I was working with a client of mine, and he was ecstatic. He was like, "I'm ready. I want to buy a house, and I got 5% down, and I got the closing costs down, so 8%." I'm like, "Fantastic! What kind of house do you want to buy?" He said, "I want to buy a multi-unit." I said, "Okay, take a step back, right? It's not the same. It's different when you buy a multi-unit versus a like just one unit, right? Multi-unit means you have different levels to a house where people can live, like
You
specific
could
families
rent out a
can live.
second unit, right? So,
Right, exactly.
and multi units are easier to qualify for as well because we can use the second unit's rent as additional income to help you
Ah,
qualify. But yeah, like I said, it's either you can only go to 5% if you qualify for the first time home buyer program. If not, it'll be 15% down.
okay. So here's my kind of last question, If I'm buying a house and let's say I'm going through UIF in this example, what are best practices or things that I should avoid once I have a live file, a pending file?
I would say stop spending. Stop spending outside of your regular necessities, because obviously everybody has a different financial situation. And then let's say your down payment plus your closing costs, more expenses can come up at the last minute. That's the first thing. Second is do not open any more credit lines, such as credit cards or furniture shopping, Home Depot shopping, appliance shopping. Please do not do that until you have closed on your property. Also, do not think you're smart enough to uh, open a credit card and take money out of the credit card to use it for down payment. Those type of things do not go well. Always communicate with your financial consultant before taking any type of financial risk or any type of financial steps, such
Okay,
as
financial consultant. If you don't have one, ask your real estate agent or ask the guy
exactly.
working at UIF. Like they will
Always
tell you.
ask. Ask.
Yeah.
Asking is better than just doing it without asking. Right?
Yeah.
Always ask. What's gonna happen? What's the worst thing that's gonna happen if you ask? Right?
Right.
If that's something you can do, you can do it right away, or you can wait till you're done with your closing of your property. Once you have secured your property, then go ahead. A lot of people buy cars, appliance shopping.
Well, I got one for you. I got one for you. I get paid $5,000 a month, right? Everything is great. I'm a W-2 employee, right? But what ends up happening is as soon as the 5K hits my account, I take it all out cash. All right. And now I got 150K cash waiting to buy a house. What happens now? I got money. I have money. I
we
have
can't
150K.
we can't use the 150K because any type when you're buying a residential property, cash is not usable at all. Because there are federal guidelines. We don't know where the 150K is coming from. It could be coming from selling milk, or it could be coming from doing illegal business, right? So we have to source all our funds. If you have money in cash, I would say get it in your account right now, as quickly as possible, so it starts growing in your account. So when you do end up buying a house, the money's already in your account. Don't hold on to cash.
Okay, yeah, I wanted to just quickly mention that because I always run into that situation, right?
Oh, that's like 99% of the time we run into that situation.
Yeah, yeah, and for for the ones who are viewing, I know we have this idea in our culture, regardless of the country we're from, that always hide your money and keep it hidden under your bed, or have like a safe lockbox where you keep your money in, or have a savings account where you keep all your money in.
A lot of people write cashier's checks to themselves.
Oh, subhanallah, I didn't even know about that. Okay, okay. Um, Look, those things were great measures to take for our earlier generations, where we were at a point of a financial struggle, so we had to save money. But in this generation, a lot of the viewers who are watching this, we're at a point where Alhamdulillah, Allah subhanahu wa ta'ala like privileged us, gave us some sense of quote unquote extra money, if you want to call it that. So if you have this extra money, you should not put it in a savings account. This is, you can ask a financial advisor about this, but you should not put it in a savings account. You should not put it under your bed. It should not be in a safe lockbox. It should be invested somewhere. It
Yeah,
should be invested somewhere.
they
I'm
could
not saying
invest.
invest in houses. You don't have to do that.
Hey, invest with UIF. Invest with UIF. Minimum is five
Wow, well, I
thousand.
was trying not to
You
like
know,
talk about me, but then you talked about yourself.
invest with UIF.
No, but genuinely, like honestly, like that we're not at a point where we can work backwards with our money. We have to be smart with our money. Whatever the investment is, just make sure it's halal and invest through that means, and
Exactly.
make sure that your money is moving. And inshallah, this helps overall. Um, do you have any last thoughts or final thoughts before we conclude, Brother Sultan?
I think we did pretty good. This is very hopefully people that have chimed in they learned something from today's our Q&A session,
Alhamdulillah.
and hopefully we can do more going forward and educate the community a little bit more.
Inshallah. And if you guys have any questions, I mean, feel free to ask myself. You can reach out to Said Sultan Mohsin. He's on. You can just Google his name on UIF. He'll come up as the first link. You guys know how to contact me as well. This was a great time. I appreciate you making time for this. Alhamdulillah, it worked out well. I know with some technical difficulties, but we got it done. It is the very first ever episode, so it's a special episode, especially for me. So I really appreciate you being on here. And with that, let's conclude, inshallah. Subhanaka Allahumma hamdik, nashhadu an la ilaha illa ant, nastaghfiruka wa natubu ilaik. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam.